Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. In this video, we are going to be looking at the Fibonacci tool. Specifically, we are going to be looking at Fibonacci scalping strategy. All right. So if you are looking to get faster, more precise entries and exits in your trades, then you are in the right place. So in this video, we are going to be covering everything you need to know in order to use Fibonacci retracement levels to enhance your scalping game. So stick around till the end. This could make a big difference in your trading strategy. All right. So whether you are new to the Fibonacci extension or if you have prior experience using Fibonacci, whether you are new to using the Fibonacci retracement tool or if you have prior experience using this indicator, there is something for you to learn in this video. Okay, so if you are new here, don't forget to hit the like button and subscribe for more trading tips like this. First, let's talk about what Fibonacci scalping is and why it is effective. Fibonacci levels, as we can see, these are Fibonacci levels. All right, so Fibonacci levels are based on a sequence of numbers identified by the mathematician Leonardo Fibonacci, and these numbers appear all around us, even in nature. When applied to trading, Fibonacci levels help us pinpoint potential reversal zones. As we can see here, these levels are potential reversal zones. All right. Now, when you plot the Fibonacci retracement on your chart, you get an idea of possible levels where the price of the assets will likely reverse. Okay. Now, this Fibonacci tool is mostly used in the trending market, so you can get points of retracement or the end points of retracements. Okay, so when you have price in a bullish trend, for example, and then you plot the Fibonacci retracement tool, you can see that it predicts possible levels where price will get to before the trend continues. Okay, now by overlaying Fibonacci levels on a price chart like we did here, we can identify high probability entry and exit points. Because if you are trading in the direction of the trend and you plot your Fibonacci retracement levels, when the price retraces to one of those levels, it gives you an entry point, okay, where you can enter your trade in the direction of the trend. Okay, so in order to start using this indicator, you need to, of course, you need to select the currency pair that you want to trade, identify a trending market. It could be a bullish trend or a bearish trend. And then what you need to do is, if it is a bullish trend, for example, you look for a point of reversal, for example, the low of one of the lows. You have to pick one of the lows, and then you pick the high, the last high, after which you want to predict the next pullback. Okay, so for example, this is my starting point, this low, and then I want to predict the pullback of this move from here to here. So you plot the Fibonacci retracement tool from this low to this high, and then the lines will automatically come out to predict the possible retracement level for that move. Okay, and we can see that the price retraced between 23.6 to 38.2% Fibonacci level. Okay, once you have placed the Fibonacci retracement tool on your chart, you should see levels, you should see levels like this: the 23.6, the 38.2, the 50%, 61.8%, 78.6%. These levels, they act as potential reversal zones or areas of support and resistance. Now, the 38.2%, the 50%, and the 61.8% retracement levels are the levels that we are going to be focusing on, okay, in this method. So you have to watch for price to retrace a key level when you are using this strategy. All right. After a strong move in one direction, we expect a pullback to one of the Fibonacci levels. Now, because we are talking about scalping, let us go to a smaller time frame. All right. So I just went now to the 15 minutes time frame, and we are going to plot the Fibonacci retracement tool on the chart again in this time frame. All right. So remember, you should identify a trend. It should be a trending market. All right. It should be a trending market. Could be a bearish trend or a bullish trend. Okay. So after a strong move in one direction, let's look for a very good example. Okay. You can see we have a bullish trend here. All right. Okay. So let us work with this, or even this. Let us start from the first move. Okay, so let us start from the first move. All right. So you first of all identify a strong move in one direction, which is this. You can see this strong move in this direction. Then after that strong move, of course, we will be expecting a pullback to one of the Fibonacci levels. All right. So let's say we are in an uptrend, as we have here. If the price retraces to the 50% level, for example, and finds support, this could be a great place to enter a long position. All right. For downtrends, you look for resistance at these levels for potential short entries. But now, since this is a bullish trend, we just have to look out for price giving reversal signals around the 50% or the 61% or the 38.2%. So in this case, we can see that the price dropped down all the way to the 50%, and then we had a bullish candle form. But then on getting to the 38%, 38.2%, we saw a consolidation. And of course, this bullish candle that formed is a bullish candle, but the pattern itself is more like a bearish candlestick pattern because it has a long wick on top. Although it is a bullish candle because it started at this point and closed higher than when it started. All right, that's what made it a bullish candle. But in terms of its pattern, it's more of a bearish candlestick pattern because of the long wick above and the small body below. Okay, so this wouldn't have been a good point to enter a buy because of the signal from the candlestick pattern. So we would have waited a bit, and then we can see that there was a consolidation around here, and then we had the price drop to the 61.8% level. All right, then after that, we now had uh, an indecision candle of some sort, although it has a bigger body, but it's a small candle compared to this prior candle and the next candle. So after this pattern formed, this would have been a good point to enter a buy because this is more like a bullish candlestick pattern. All right, so we would have entered a buy around here, and then stop loss can just be below the pattern, and then a take profit can be at the resistance zone, the 0% resistance zone given by the Fibonacci level. So this is a scalping strategy. All right, you wouldn't want to stay in the trade for too long. You want to look for as many opportunities as you can, even within the trend. Okay, now it's also important that you confirm your signals with additional indicators. So to improve your accuracy, you can use other indicators such as the RSI or MACD just for confirmation. All right, for example, let us just add on the RSI to the chart. Okay, so we can see that when we had a buy signal from the Fibonacci, we can see that around that time we had the RSI also pointing upwards, somewhat around the 50 level, okay, and then it was trending upwards. So that is our bullish confirmation from the RSI, okay. Now it's also important that you plan your exit strategy ahead of time. You want to secure small consistent profits with scalping, right? That is the aim of scalping. So do not overstay your trade, okay? Many scalpers aim for profit levels at nearly or at nearby Fibonacci extensions, all right? So you can also use, you know, you can just decide to watch out for a good risk to reward ratio. For example, if you enter a buy around here, and then because it is scalping, some scalpers are okay with 1 to 1, yeah, because it's scalping, so you can actually use 1 to 1 risk to reward ratio, even though that's not the best, all right. But for the sake of scalping, you can consider 1 to 1. So if you are risking $1, then your profits should not be less than $1, right? So if you enter a buy around here, then your stop loss can be around here. Your take profit can be just at the nearest resistance level, all right? Because you could have a rejection. So it's better you lock in your profits and look for another opportunity, okay? So now let us talk about trade management and risk control. One of the biggest mistakes traders make with scalping is overexposure. With this Fibonacci scalping strategy, we want to protect our trades with tight stop losses, okay? Keeping the losses small in case the price moves against us. So here's how to manage your trades effectively. One, you have to set a stop loss just below the Fibonacci level. That is, if it is a buy trade, okay? If it is a sell, then it's just above the Fibonacci level. So in the case of this buy, just below the Fibonacci level, you set your stop loss. All right, this way you're allowing for some price fluctuation, but cutting your loss if the trend fails. Then secondly, you have to keep your position sizes small, all right? Scalping is about small frequent wins. So avoid risking too much on any one trade, okay? A good rule of thumb is to risk no more than 1 to 2% of your trading account per trade. This will help you stay in the game longer, even if some trades don't go your way. Then thirdly, stick to high volatility pairs, okay? Since scalping is about quick trades, as you can see, we are on the XAU USD chart. This is a volatile pair, all right? So if you're scalping, it's better if you go for high liquidity and high volatility pairs, all right? These pairs tend to respect Fibonacci levels more consistently due to their volume and liquidity. So you can actually try out Euro USD also. You can try out GBP USD as well, okay? So that wraps up our breakdown of the Fibonacci scalping strategy. All right. Now, this strategy can help you approach scalping with a more structured and strategic mindset, allowing you to make trades based on clear, proven levels rather than guesswork. Okay, this is not a guessing game. So if you found this video helpful, don't forget to hit that like button. It helps the channel reach more people interested in Forex trading strategies. And of course, make sure you subscribe for more insights on Forex, day trading, and technical analysis tips. Thanks for watching, and let's take on the markets with precision. Drop a comment below if you have any questions about Fibonacci scalping, or if there are other strategies you'd like me to cover. Remember, successful trading comes from practice and discipline. So keep honing your skills and stay tuned for more trading strategies. Thanks for watching, and I'll see you in the next video.